They couldn't talk peace with me. They tried, and I was like, nigga, this schoolyard.
It's your boy Crypto Blood, and I want to introduce you guys to a new exchange, BitYard. They do cryptocurrency contracts. If you're like me, an active trader, you're probably sick of the market manipulations, forced liquidations, accurate Bitcoin reference rates over at BitYard with K-line weighted averages, no VPN hassle, available for US citizens, and fully regulated in Singapore, Australia, Estonia, and the US. Profit losses are all in USD as well, and no fees with US withdrawals. And most importantly, you can do deposits with fiat. Unlike BitMEX, you can't do that, right? So check out bityard.com. I'll leave a link in the description below.
Still fresh and I'm so smooth.
Yeah, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is May 21st, 2020. Wow. If you haven't heard it, please go stream this one. Jordan Lucas and Will Smith. Will, the remix. Yikes, I didn't know Will Smith still had the bars. He is spitting them on this one, people. Make sure you go check it out. Thanks for the song request, The Tech Geek, one of my YouTube premium members. What's good, people? Welcome to another episode. Let's get right into it. Today, we're going to be looking at the situation over there on the Bitcoin network. We talked about it prior to the halving. I told you guys this whole Bitcoin thing is an experiment. It's so far been a very successful experiment. But we have to always remember around these halving events, at some point, you know, the price of this asset, Bitcoin that is, has to continually rise exponentially after each halving to incentivize or keep the incentivization of the miners, because if you don't have the miners, you don't have a network. So to say all that, I'm saying that Bitcoin has seen an increase in fees of 800% over the last month and a decrease of hash power by 30% after this halving. We're going to look into more details on what's going on here, how you should plan to approach this, because there are some things there's some moving parts in this. Okay, so I want to just break all that down for you guys today. And I literally just talked about this with Hash Oshi. I had him on for a kicking a session a few days ago. You guys will see that, the public will, maybe next week. But talked about quantum resistant. That is a very big concern of mine in the crypto space. And when I saw this, I had to just at least touch on this. This is about Ethereum. Looks like EnQlave is going to have a quantum proof wallet. Not done yet, but I just wanted to give you guys a heads up on that. That would be a game changer for me. So we're going to take a look at that out of the Merkle. And lastly, Block.one will now start voting for EOS candidates, but wants their locations first. Is this a good thing? Is this a bad thing? A lot of people were complaining about how China, a lot of the BPs were in China. Is this a good thing? Is this a bad thing? We'll look at the article out of CoinDesk and then discuss that as well. All three of these topics coming up on today's episode. But before we start, if you guys find these types of videos informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. But let's look at this heat map. Wow, we are in the red big time. As your boy Crypto Blood told you, I did not think this rally would sustain itself. The head and shoulders were forming. I showed you that last week. We talked about it yesterday. We talked about it the other day. Listen, Crypto Diamonds strikes again. Bitcoin down 6.1% to 8,933 bucks. We got Ethereum down 7%. Wow, 194 bucks. It lost the $200 handle. We got XRP down 4.8%, Litecoin down 4.3% to $42.19, EOS down 5.7% to $2.43. Binance is also down 5.5% to $15.84. Let's look at this chart. This is a bad indicator right here, a break of that trend line. Okay, that is not a good look. I'm just gonna be honest with you guys. So now, I mean, I can delete this circle and redraw this right shoulder now like that, and I think this is probably honestly an artificial pump right here, because this was the true shoulder. Okay, that was the true shoulder that we were supposed to head down. I'm going to change the color of that really quickly. This was the true shoulder and should have continued us downward. However, we had some bulls trying to trick us out of that one. It was a pump fake, and they couldn't get above this last area, so we fell a few hours ago. Actually, we're short on Ethereum, and up nicely because we went short a whole day ago in Ethereum. So looking good. We did try to buy the dip on the Bitcoin algo, but got stopped off with minimal loss. But that ETH is riding. We're making good gains on that at the moment. Let's take a look at this Ethereum quantum proof wallet. It's just a quick snippet update on what's going on with a coin and wallet called EnQlave. So EnQlave positions itself as the quantum safe for crypto assets, but it remains to be seen if it actually can live up to those expectations. And as you guys know, it is widely known that quantum hardware will effectively break current protocols, and that's why I'm so concerned about us upgrading our protocols, our encryption levels, to handle quantum hardware type of operation. For the EnQlave team, that solution comes in the form as a standalone post-quantum wallet for Ethereum. Most specifically, users are offered a chance to secure their Ether and ERC20 tokens from quantum theft. This also means that the QRL token will be advertised as the first post-quantum secure token on Ethereum. It is also worth noting that EnQlave is compatible with the Ledger hardware wallet series. Outbound transactions will be signed with the default Ethereum ECDSA signature, as well as an XMSS signature from a public key. For now, the EnQlave wallet is still in prototype, not production ready just yet. So keep a lookout for this QRL token, guys. This may be worth a pretty penny. Seriously, let's see who else comes out with stuff. I'm assuming they're going to leverage that QRL token with their ecosystem and their wallet. You're going to have to like buy a number of tokens to do whatever you need to do, but keep an eye out on that. I wanted to really give you guys a heads up on that. That is major news right there. And second article out of CoinDesk really quickly, Block.one will start voting. We knew this was coming. They made that announcement, I think last year sometime, but they want their locations of the candidates, the BPs, first. What do you guys think about this? Block.one is about to begin wielding its juggernaut EOS allocation in the ecosystem's governance, but the multi-billion-dollar developer has some prerequisites. Block.one owns about 10% of the current total supply, outlined in the criteria it would use to decide on which block producer candidates to support and vote for. So there are 3 requirements. Numbers 2 and 3 are the BP candidates nodes has to be running version 2 or higher and has to be independently operating as a public queryable node. But it's the first requirement that's perhaps the most interesting, and that is the general location of the node has to be disclosed publicly through the BP JSON file. So in other words, Block.one wants BP candidates to disclose where it's based before it will lend it its hefty support. In an email to CoinDesk, Kevin Rose, who used to be head of BP EOS New York and now manages relations between Block.one and the EOS community, which, guys, if you haven't seen that Kicking It session, you need to go back and check it out. Very dope interview. I like Kevin Rose a lot. I have to definitely have him back on. I didn't know he moved to Block.one, but he played down the location requirement, saying it was just a factor to be taken into consideration when deciding for whom to vote. CoinDesk asked Rose why Block.one wanted to have BP's location in the first place. He says, as with any public decentralized blockchain, understanding the general geographic distribution of block producing nodes is helpful information for self-evident reasons, he said. The article goes on to say that Block.one stayed out of EOS governance for a long time, saying at the time of the mainnet launch that its sizable token allocation gave it an outsized voice in the still nascent community. As EOS's creator, the firm retains an influential role in the ecosystem, thus receiving support from Block.one will be substantial for any BP. There is one caveat though. Block.one is rigorously defending its right to change its voting criteria at will. They say we maintain the ability to adjust voting criteria at any time. Rose said, as we engage with community members, our voting approach will evolve and criteria will be added to ensure that the recipients of our votes adhere to the standards we wish to see network-wide. So what do you guys think about that? I honestly think this is not a bad thing, because if you want to have a redundant and what do you want to say, anti-fragile network, you don't want all the nodes, all the BPs and clustered in one location geographically. What if there were all 21 BPs all in China? You see what's going on now with the CCP and America and the world, really. That wouldn't be a great scenario. So if they're willing to give their vote, meaning Block.one, then they can have their own criteria. It's not like the actual network is requiring these BPs to do it. It's just if you want to get money or tokens from Block.one, that's one of their criteria. I don't see a problem with it. You guys let me know. What do you think? I would love to know your comments in the section below. Last but not least, Cointelegraph, as Bitcoin halving dust settles, network awakens to costly new reality. And so they're saying that the Bitcoin block reward has been halved and Bitcoin's hash rate and transaction fees are feeling the impact. We knew this was coming, just didn't know at what capacity. A substantial number of miners have pulled the plug on their equipment due to the halved reward. Consequently, transaction fees are now considerably higher. The hash rate has shed around 25 to 40%, and new blocks are generated at remarkably low speeds. So as it stands right now, the popular Antminer S9 have been mostly turned off. Currently, an Antminer S9 is estimated to generate a negative return of $2 per day. So it doesn't make sense to keep such units online unless miners have access to free electricity. Bitcoin hash rate saw a major drop of 30% in the last 3 days after the halving, although there has been a minor rebound since the metric is still down around 25%. And that rebound, guys, is because of the adjustment in difficulty. So that adjusts every 2016 blocks. That's a dynamic thing to keep things in, so you don't have a what's called like a death spiral, right? So that difficulty rate does come down, but it takes 2016 blocks for that to happen. If you have a situation where the price of Bitcoin drops too much, it's going to take a lot of blocks for Bitcoin's difficulty adjustment to counteract that. So you have to keep that in mind, because the Bitcoin blockchain is trying to keep those blocks at a 10-minute per block completion. It goes on to say that miner capitulation has led to a series of consequences for the sector, which includes significant reduction in block generation speeds. The BTC daily block generation metric fluctuates around 100 to 120 blocks per day following the halving, but then it plunged to just 95 blocks on May 17th, thereby reaching its 2017 lows. Philip Salter, head of Genesis Mining, said that block times rose to something like 12 minutes instead of the usual 10 minutes, but the capacity of transactions in each block stayed the same. This causes congestion, less space in the blockchain, same demand for sending TXs, and this in turn causes an increase in TX fees. Yesterday on May 19th, the average block time, he said, was 14 minutes. That's pretty bad, which reduces transaction capacities of Bitcoin. So as you guys can see, this chart shows the drop off in hash rate. The mean of hash rate in yellow plummet. This can be an issue here, people. Bitcoin is dropping in price right now as well. So, it's not a problem right now. It's probably not a problem in the near future, but these are the types of things that, you're banking on and counting on new buyers to really keep the pace of this network up. We got another 4 years or so. Bitcoin price has to go up significantly because it's gonna be another halving of the block reward. So just keep that in mind. It's a good thing and a bad thing, right? If you look at the glass half full, that means in 4 years it has to go up. Like, the price literally has to go up, and so you can rely on possibly the stock to flow model, which is saying over $100,000 in the next 3 years. I think it's actually 200 and something thousand now. They updated the stock to flow. So I don't know. Let me know your thoughts on that. But again, fees have gone up 800% over a month here. So not a good look. Just remember, hash rate is going to continue to probably drop, but also that means the difficulty rate will adjust downward as well. So it'll find an equilibrium hopefully soon, right? We don't want to see what we saw in 2017. It was taking like a day to move a Bitcoin. At that point, we got some issues. Even if you're looking at it as a form of value storage, right, an asset, you don't want to have it take a day for it to move, especially with Fed now coming 2024. They're going to be replacing the current outdated ACH system. It's going to be like lightning fast. It's going to be instant. So we gotta keep things updated and gotta keep up to speed with technology, because you gotta remember, people, it's about the user experience. We don't, most people, I care, but most people don't care about the Federal Reserve printing this and Jekyll Creature Island this and the 5 families did this, and they don't care about any of that. They don't even care about the Treasury taking over Fed control or MMT and all these things that most of you guys follow and are up to speed on. Most people don't care. That's why Cash App is so popular today. So we got to keep that in mind. Kind of zoom out, right? We kind of have that group think in crypto. We got to zoom out a little bit. Let me know your thoughts on all 3 articles today, all topics. And again, shout out to my man, the Tech Geek, one of my YouTube premium members. I can't even get to my regular members' song requests because the premium ones keep loading them up. So hey, if you really want a song request to come in, just become a member, support the channel. Joining Lucas, Will Smith, the Will remix. This is a hot joint right. I didn't know he had those bars. Will Smith, I see you, brother. I see you. I'm out of here, people. Holla.